Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, Daniel Snyder from Seeking Alpha back here for another episode of ETF Spotlight. And what a time to be filming this episode. You're going to find out soon enough. We have Christian Magoon, Chief Executive Officer at Amplify ETFs, coming today to talk about the HACK ETF, the Cybersecurity ETF. So Christian, I can't thank you so much for your time right now. We have so much to explore here. Why don't we just start off? So I saw just this morning, right, Dan Ives putting out a note saying that as this market rotation's going on, people might go from tech into cybersecurity, which is perfect for you being in the right place at the right time. But would love just to start, lay of the land. HACK ETF, you founded this back in 2014. What was the inspiration behind this and how did it kind of come together?
Yeah, so back in 2014, there wasn't a cybersecurity ETF. In fact, cybersecurity stocks really didn't have much, if any, exposure to the NASDAQ 100. So if you own broad-based technology ETFs, you didn't really have a direct exposure to cybersecurity. And we started to see that cybersecurity was going to be like a utility when it comes to information technology, even though many of those companies really hadn't made it to the larger market cap area. So the fund was launched in 2014. It actually was launched at ETF Managers Group under the Pure Funds brand. And actually I was part of that through a different business entity. And in fact, if you go Google it, you can see me talking the day after the fund launch on CNBC with Melissa Lee. And she was very skeptical. Why do we need a cybersecurity product out in the marketplace? And at that time, if you remember back in 2014, the Chinese had just stolen a bunch of NOAA weather data from US satellites. And that was kind of the big story. Several months thereafter, though, was the huge Sony cyber hack. And that was like the shot heard around the world where cyber stocks really came into their own. If you remember, President Obama was pushing Congress and the government to create certain standards corporately for cybersecurity spends, et cetera. And the fund really in a few months went from being a brand new fund in the fall to over $1 billion within about 4 months. And we were off to the races. People started to see the value and the differentiation of cybersecurity. It's really a growth sector being in technology, but there's a safety net under the spending proposition of cybersecurity. The risks are just too great for governments, corporations, and individuals to skimp in this area, Daniel. So cybersecurity is very unique kind of growth thematic that even benefits from uncertain times like we're in right now with some of the kind of soft attacks that nation states may go out and do. So very timely, I think, analysis from Dan Ives, because people are trying to de-risk from maybe Meg 7. You go into cybersecurity, you still stay in technology, but you get that Meg 7 exposure out. These companies are providing cybersecurity to Meg 7 and others.
Yeah, that's a very good point. And also, I want to say you didn't mention the hack of the pipeline in the southeast region of the United States. That happened in recent years, and everybody saw the effects of that as well. So obviously, cybersecurity comes top of mind pretty much every few years. So from a long-term investor standpoint, looking at the markets where they are right now, the uncertainty, the volatility, and kind of looking for where do I maybe allocate capital now? Why is it that cybersecurity just makes so much sense to provide targeted exposure in this area, and specifically the HACK ETF?
Yeah, so cybersecurity is going to be a continued issue, very high priority as we continue to digitize our lives. As we have more and more assets being held digitally, if we tokenize stocks and bonds, which is a priority I know from BlackRock and with the SEC, there's just more and more risks there. And these are the firms that go in and create the software, create the artificial intelligence to kind of prevent these types of intrusions, but also they're the ones who get the first call to clean up the intrusions. And we're seeing systems intrusions, but now we're even seeing risks being flagged on medical devices, many that have an app or electronic component for safety reasons. And that was a story out just this past week. So the threat just continues to grow broader and quicker, especially with, unfortunately, the bad guys starting to implement AI. That scales up their ability to attack as well as the sophistication. So there's just going to be more spending in this area. And the reality is these big cyber attacks and intrusions tend to be bullish events for cybersecurity stocks. So, you can kind of from a perverse way look at it when you see these headlines and realize when there's a major attack or event that one of the companies you own in the cybersecurity ETF hack will benefit generally from these types of incursions because they're going to get more work. They're going to see companies increase or governments increase their spending. So as a long-term growth tail, this is going to be, I don't want to say forever, but certainly for the near-term future, 5 to 10 years out, only an increasing area in terms of spending and opportunities for these companies. With HACK is, we believe, the most pure cybersecurity ETF. It was the first one to launch in the US, and it has only about 23 companies in it, very concentrated relative to some of the other competitors that are kind of branching out and owning more broad-based companies that may have a small bit of cybersecurity in their business. But are really not core plays. And our partner, the NASDAQ, who creates this index, really is focused on purity. And it's shown last year. Of the, I think, 3 main cybersecurity ETFs, HACK had the best performance, outperforming the competition by over 500 basis points. And we really think it's due to the purity included in the index selection criteria. You have to have 90% or more of your revenue as a company to be included in the index. There's another way you can be included in the index, and that is simply based on your overall revenue score relative to your market cap and then relative to the overall market cap. So these are the companies that are contributing the most to cybersecurity in terms of revenue, or have 90% or more of their revenue coming from their underlying cybersecurity business. And with only 23 companies in the portfolio right now, that's pretty concentrated for the average ETF. Most ETFs you're going to see maybe 30 to 50 companies. So we think HACK is kind of the premier way to play it. And certainly its recent performance has been good. But I got to tell you right now, with this tariff sell-off, it hasn't been immune to that. Certainly held up better than the NASDAQ 100. But cybersecurity stocks are kind of where they were in 2021 in terms of levels. So there is probably a nice opportunity here if you're looking to stay in tech, but maybe take a little bit more prudent approach and not bet on a concentrated kind of Meg 7 portfolio. The weighting is fairly flat in our cybersecurity ETF. The largest stock is weighted just over 7% currently, and you can see that on our website any given day, amplifyetfs.com. This is an index that rebalances on a quarterly basis. But again, if you're trying to stay in tech, but maybe be a little bit more prudent here, I think cybersecurity is a great way to go. Valuations are the same as where they were kind of, or at least pricing levels. Back in 2021, there was a U that kind of happened in terms of recovery from 21 to 25. It was ahead of that number recently, and then the last several days of sell-off, we've gotten back down to that 21 price level. So I think could be an opportune time for people to take a look at HACK, and glad you were talking about it right now in the midst of this tariff tantrum.
Yeah, and so for the index, that's the NASDAQ ISE Cybersecurity Select Index, just so everybody is aware that we usually talk about here on the show. And actually, I'm going off script here a little bit. I do remember a few years ago here on Seeking Alpha having a great interview with the legendary investor George Ball, who I think was the first one that ever brought the HACK ETF to my awareness. And I know he loves it as well. Most people look to the HACK ETF for the cybersecurity plays because you have hardware, you got software, you got services. So you have this diversified approach. So how does that enhance investors' returns in the long run?
Yeah, well, it allows you to kind of, instead of trying to figure out what the right company is or the right vertical in cybersecurity, it really allows you to take that risk off and not have business-specific risk or sub-industry specific risk. Instead, just shotgun that area and own kind of the diversified approach to cybersecurity. So, whether it's some of the companies that are leaning more into AI in the cybersecurity space, you get them. Whether it's more the infrastructure players, you get them. Those that provide services, and go in and clean up these messes or do the diagnostics, you get those companies. And again, only 23 in the portfolio today, but really, I think, give you a diversified approach and allow you to see the sector as a whole. Great complement to an overall growth allocation because you know it's diversified by company and by segment. And then the Nasdaq does a great job of assessing based off this index criteria every quarter. And every quarter the fund is rebalanced, so you don't have to worry about kind of when to buy and sell, when to kind of trim your winners or add to your losers. It's really done for you in the index methodology. So we think Hack is quite convenient and a nice way to kind of recognize that cybersecurity is a theme you want to be in, but not get caught up and kind of missing out on buying the one or two or three stocks where you might be right or you could be wrong as well.
Yeah, good point. So I'm looking here at the top 10 holdings. You've got Broadcom, Cisco, Northrop Grumman, General Dynamics, Palo Alto Networks, CrowdStrike, Fortinet. A lot of the names, Okta, I could go on, right? A lot of the names that people are aware of. And I think the one outlier here, I love, and maybe not an outlier, but I'd like to get your take if you don't mind, is we're thinking about governments having to fortify all their technology in this modern era. And that's obviously got to be a huge source of revenue. So I wondered if you have any thoughts on how that dynamic might continue to play out in the years ahead.
Yeah, well, governments continually are finding out that their systems are problematic. I mean, we've seen it with Doge here and looking at kind of the code that happens in these systems that tend to be aged. The way software purchasing works in the US government is kind of flawed. If you sign a 10-year contract, you have to take that whole contract payment against your budget in year one. You can't spread it out over 10 years. So it's really pushed the government to not be as proactive in terms of upgrading their software. We think with this new administration and this new analysis on kind of government infrastructure, specifically IT, that this is going to be very kind of a hidden catalyst for cybersecurity companies. They're already interacting through consultancy work with the federal government, but certainly these systems really need to be in place and embedded, and instead of working on the old systems trying to make them more hardened, the new technology really needs to be put into place. And we're getting into an environment here. Of course, the last 3 years we've been in that environment where many nation states are putting their elbows out now and trying to do these kind of Cold War attacks, if you will, target electricity grids, target various forms of infrastructure. And, it's primarily been overseas, but we certainly know Iran, North Korea, Russia, they're not afraid to use those types of weaponizations. And I think there has been some targeting here in the US on certain power infrastructure as well as some medical institutions. So I think the US has to take a full kind of 360-degree look at this. And now with this current administration, they seem to be trying to drag the future into the government. There's an AI czar now for the first time. So I think those types of moves to modernize and kind of harden our cybersecurity are going to be a big deal. We just saw what happened on the Signal chat. That wasn't super secure for one reason or the other. We don't know, but hardened communications is also part of cybersecurity. So seemingly this is going to be a big deal in this current administration, and we could see a ramp up in spending, despite overall the government looking at less spending on kind of fraud and abuse levels. Cybersecurity, again, too much risk. There's too many things that are digitized now. So we really think that could be a near-term catalyst, let alone the corporations. And we've seen, various corporations kind of get hijacked, whether it's Sony back in the day to kind of start it off, or some of these major hospitals we've heard where records have been kind of locked down unless ransoms were paid. There's just a lot going on kind of in the marketplace of ideas, and the rise of AI is a double-edged sword for this whole theme, whether it's the criminals kind of using AI to scale up and make their attacks more sophisticated, or certainly the companies that are defenders trying to invest more on AI solutions. So a lot happening there. I think it could be a great environment, and you can't bet against, I think, the whole digitization of the US, the world. And if you're betting alongside that, there's certain areas like artificial intelligence, we would say blockchain, but also cybersecurity technology that should benefit.
I wanted to ask you, we're talking about catalysts for growth, but also investors can't help but think about the risk. And you're saying AI. Is AI the biggest risk? Is it quantum computing? What's the risk going forward from here?
Yeah, I mean, those are all going to be challenges and opportunities. So, the bad hat actors are going to use, AI. They're going to incorporate quantum computing, and the race is on now for, these companies to be able to secure the server power to have better AI. And then second, in terms of cryptography, there's going to have to be some cryptography developed that's quantum computing proof. And we've heard that actually from the AI and crypto czar, David Sachs, out of the administration, specifically as it was addressed in terms of Bitcoin. Bitcoin has never been hacked as a blockchain, very secure, but it appears that quantum computing could give it a run for its money. Thus, a different type or a modified type of cryptography is going to have to be developed for Bitcoin, and that'll be along the lines of cybersecurity. It has been the most hardened blockchain or piece of technology out there in terms of Bitcoin. I think a lot of that is because it is decentralized, but quantum computing definitely presents a threat. So these are all kind of areas that work against cybersecurity companies and for them. It's going to require a lot more investment, and that's going to raise prices for them and raise the cost of governments and corporations and frankly us as individuals going out and making that spend. So probably a risk will be the management teams balancing that R&D investment with what they're able to charge customers. The good news is the risks are so great on cyber intrusion, whether it's reputational or just from an overall business integrity standpoint, that many boards just cannot spend enough on cybersecurity because it is a existential threat to their business. If they do have a violation, just could ruin a brand's reputation, and we've seen it, unfortunately, many times. So I think we have to be balanced when we look at any growth sector. Certainly, kind of the inherent demand for this growth sector that's not as cyclical as, say, semiconductors or AI data center spends, I think is makes it stand out relative to the technology stack. But we are going to see more volatility than, for example, a broad-based product like the S&P or a value sector. This is a growth sector, and it is technology, and expect some of that volatility. But again, over the long term, we think it kind of differentiates itself as a utility spend or a spend that's necessary relative to some of the other technology verticals that really can be cyclical and be affected by economic kind of headwinds.
Christian, I feel like I could talk to you for another hour about all of this, but let's go ahead and wrap it up here. I hope to have you back on the program. This was extremely insightful. Let's do it again in another, what do you say, like 6 months or so.
Sounds good.
Thanks so much. Christian Magoon from Amplify ETFs, everybody talking here today about the HACK ETF. Go check it out. And thank you for tuning in to another episode of ETF Spotlight. We'll see you in the next one.